Hi, this is Christian. It's 12th of December 2021. This is the first video that I'm recording. The purpose of recording these videos is to help me improve my trading results. I'm not trying to sell anything or anything like that. This is literally actually very much just a verbal memo to myself to try and help me improve my system and overcome any sort of shortcomings I've got. A few sort of key pointers that I have to myself is I'm doing this to achieve our 2040 goals. And we're going to do that through primarily investing in true market leader stocks that are in stage 2 and sell those going into stage 3. Primarily going to do that with options, trading end of day. I found options to be a lot more effective risk return and just seem to suit my personality more than stock. I trade mostly US shares, but being in Australia, the time zones are completely upside down. So I can't be there to sort of trade exactly on breakouts like swing traders do. So I find that options just are allowing me to just a bit more forgiving in terms of the entry price, but I still get a lot of upside leverage with cap downside. So on that, so ideally I'm looking to get free leverage in black swan events. So the free leverage part really sort of the options. And so, say for example, I can buy some options, and then if hopefully they go up, maybe sell some or use profits from others to fund other options trades in positive and negative black swan events. So at the moment, for example, I've been in semiconductors. There's been a huge shortage around the world, so I put that down as a black swan event. And as we know, if trying to find opportunities where the market hasn't sort of looked at things correctly, and I kind of call anything like that sort of that. I put that into a black swan bucket. This next point is, I think it's a Dan Zanger quote: "If you do your homework, you have more money than you know what to do with." And I think there's actually some truth in that. The more I study my system, the better I go. I just got to keep reminding myself of that. There's only a few times each year when the big money's made, which is actually true. And then the idea then is to make as much money as you can during those times, and then hopefully to give it all back in between times, which is quite often what I've done. Quite often, people just see this as an intellectual thing and trying to outguess the market. I'm just not that smart. So the more I do this, the more I realize I just have to dumb it down. And my job, or a trader's job, is just to be a risk taker and a manager, not a sort of huge intellect. The other thing is, I learnt this one the hard way. I was pretty heavy in growth stocks earlier in 2021 and got slammed. So Teladoc is one there. So I've just got that there as a reminder to, it's not just my money capital that I have to protect, it's my mental capital. Really don't want to have to go through that again. The other thing is, and I guess this is the main thing, is just to stick with the facts. So I've got a system that I've been researching. It needs to be tweaked. Saying things out loud in this video format is actually uncovered like a few things I've got to improve, and I've always been improving it. But the idea is, I develop a system and trade the system, not my emotions. And quite honestly, I've fallen into the latter category sort of far too many times. And I guess on that, before I make decisions, buy, sell, hold, don't do anything, make sure I've got make sure I go through my checklist. And I think a good example there, that SEALs spent so much time practicing before they raided the Bin Laden compound. They even spent $8 million replicating the compound. Okay, so that's the basics of it. I won't go over that too many times in future videos. Now, my first thing that I do is break the market down. So first I look at the overall market, and then I break that down into traffic lights. Double green is a generational opportunity. 2018 COVID were good examples of that. Green is sort of intermittent lows, and there's a sort of twice a year type, January type events you get. Amber is when things are sort of going along okay, slash starting to peak. So, and then red is when it's just all out selling. So if I just go to my other spreadsheet, I'm going to bring this across another screen. I'll go to market. Now this is just where I analyze where I think the market's up to. Okay, so these are sort of some key numbers here. We've had 6 distribution days in the last 25 days. So I should say there's quite a lot of negativity around. Everyone's expecting the Fed to taper. A lot of sort of negative comments on Twitter. But again, my job, I'm trying not to sort of take the emotion on board, but just have a series of facts and checklists to go through to more objectively answer that question for myself. So I'm just jumping a bit all over the place here. We had a follow-through day back early in October, and one of the key ways that I've used for intermittent lows is when the number of, this is a Chris Peruna one from Twitter, so thank you. When the number of stocks drops below, this on the NASDAQ, that drops below their 50, when they drop below the 50-day moving average, when they drop below 20% and then starts rising back above 20%, I found that to be a very reliable indicator that we've got an intermittent low in. When there's sort of generational opportunity, that double green that I was referring to, that's when the number of stocks trading below their 200-day moving average drops below 15% and then picks back up. 2020 was a prime example of that. Okay, so just looking at the indexes, I've got the NASDAQ, S&P here. Distribution days, yeah, that's highish, but that's to be expected because we have had a bit of a nasty sell for the last few weeks. So in some ways, I'm not sure sometimes how useful the distribution days, or at least just probably needs to be taken into context because if you've been having a market sell-off, of course, the distribution days are going to be high. I think that the more the point is, we're having distribution days, but the market is sort of bubbling along okay, so it appears to be okay, but not necessarily because you're getting churn starting to happen. Okay, not particularly stretched from the 200-day moving average. No major RSI divergence. Believe that the NASDAQ is in a stage 2. Now, if I just go to this chart, which is the NASDAQ, let me... okay, this is the weekly. It dropped here. We had that low in October, rallied, pulled back. Sort of for some reason, this felt like the end of the earth, and everyone was saying the bull market's over, and etc. etc. However, if you look at it, it actually really just pulled back to previous resistance that turned into support. It's tagged there, has moved along, so it hasn't actually done a whole lot wrong. You can see on the daily as well, had that nice rally, pull back, hit the top of that previous resistance, shaked out, powered off of there. So as much as I'd like to be a bear sometimes, I'm not really sure all the doom and gloom is that necessary. Let's keep moving through. Have we had any volume blowout action? Well, I think maybe in some stocks we have. Now, not necessarily NVIDIA and Tesla, that's probably wrong, but Cloudflare, AMD was sort of a bit of a double top. There was definitely like bubbly-ish sort of action, but not like major parabolic sort of moves either. Have we had panic sell capitulation days? Yeah, we actually have had a few recently. Doesn't mean there's not more to come, but there's definitely been a bit of fear hanging around, so that would actually point you a bit more towards the red, market in decline. What I found looking at the big leaders is also quite helpful in determining which way the market's moving. So distribution, yeah, there's been a bit on Netflix, been a little bit sort of here and there on the others. Now, RSI divergence, I've noticed in previous cycles that So you might have RSI divergence on Apple, and that's such a good sort of telltale sign. Netflix, there was, yeah, a little bit on Google, which we're going to come back to. And Facebook there was, but that's actually come back to long-term support. That's actually a trade I'm looking at pretty seriously at the moment. In fact, I am going to do that. Okay, VIX at 19. It was high. It was higher than that, so it's been sold down a little bit. VVIX, that got up to 140. It's sort of back more into range now. Shakeout action, yeah, there's been plenty of sell-offs. Not necessarily recovered. What I've sort of found is the big sort of work from home pandemic leaders, they've been terrible, as you all know, Peloton and DocuSign, for example. But in many other some other sectors like semis and the FANG, Microsoft, Tesla type stuff, no, not so much. Okay, so this link here is to the percentage of stocks, the percentage of NASDAQ 100 stocks that are trading below the 50-day moving average, sorry, above the 50-day moving average. So that's 62%. So that's kind of a little bit in the range. I'm going to pull back up a chart on that in a moment. And this one here is the number of the percentage of NASDAQ 100 stocks trading above the 200-day moving average. Now, that's, again, a little bit mid-range. A lot of divergence there. And that's been sort of no secret. Underneath the top 5 or 6 NASDAQ stocks, there's been huge... it's actually been a bear market. I read, taking out the top 5 stocks out of the NASDAQ this year, the NASDAQ would have been down 25%. So... but saying that, that divergence has been there on again, off again all year. So I'm not sure that's a huge thing to worry about. Now, if I just click on this, sorry. Not quite sure how this screen records working, but if I bring this across here. Okay, so I'll just zoom out. So yeah. So we had some recent buy signals back in March this year, in October this year, when this indicator sort of bombed out. And then what I found, once it starts getting that 70 or 80% or so, you need to start getting a bit more conservative. It doesn't mean the market's over, but it does mean you sort of, the easy money sort of been made at that point, apart from select, well, it's like a smaller number of leaders at that point, whereas down here it's more like shooting fish in a barrel. So October we sort of rallied off that pretty hard, and then started drifting down. Obviously that sell off. A lot of the growth stocks have been sold off pretty aggressively, and now we're sort of back into this sort of mid-range area. So that's sort of telling me that it's not massive amounts of fear or greed there. Where I have made the mistake was sort of called the bottom there, and then it sort of moves back up there, and I called that. But you have these sort of intermittent sort of moves, and these could be just nothing more than just stage 2A continuation setups happening here. So it doesn't mean it's the end of the world, even though it feels like it. But it just means that the market is just having a bit of a reset, or a slight pullback within this sort of intermediate range here. So you can see the movements here and here. All right. Okay. The next, the key one that I want to look at is the put call ratio. That's at 1.08. That's actually pretty high. Not as high as what some people think if you look back, but it does show that there's a bit of fear around. So if if I just scroll down a bit, I think where we are in the market in terms of a traffic light is sort of amber/red. We're definitely not in the easy money areas. We've had some pretty nasty sell-offs. However, some of the fears sort of just died down a little bit. So I think we're sort of in that sort of slightly harder part of the market. So okay, so what the strategy for me then is during these times, I'm not going to go all out trying to make money sort of hand over fist. I'm going to be very conservative. If I look back at the put that down. If I look back at the Nasdaq here, I'm thinking, well, that kind of looks okay. So I'm going to try and stick to the big FANG type stocks. So if the charts are setting up, I've already got Apple, which will come. So I've got Google, which I'm actually going to sell because that's sort of meandering up. But I think Facebook's actually setting up pretty well. Now, this is not a new trend. This year has obviously been a lot of money because it's moved into these FANG stocks, and these sort of the Rokus and the Fastlys of the world have been sold off pretty aggressively. A lot of people are thinking the market's just going to roll over with the rest of them, but I don't really see that happening in the chart right at the moment. Now, obviously, that could happen. We've had a big run, so again, I'm going to play it pretty safe, but I'm going to put some trades towards that way. And then also underneath that, just the best of the best. So what's really standing out to me at the moment is semiconductors. So a lot of the charts there are super powerful. I've made some pretty good money on those. So I'm going to put my effort there. So basically FANG stocks, semis, and then maybe like sort of one or two ones underneath that are setting up pretty well. I'm only about 10% invested at the moment. Position sizing is something I'm going to have to sort of do other videos on and talk myself through more. But just to give you a bit of context there, but that 10% is mostly in options, so longer-ish term, out of the money options. So it's not like I'm not without risk on that 10%, but I don't have a huge amount of sort of overall cash exposure. So I'm going to move to my alert list now. So let me pull this up. Okay. Okay, so chop that down. I'm not going to go through all of these. Okay, the green ones are stocks that I already own. Datadog, I manage a few different accounts. I've got one Datadog position left in one of those accounts. I sold in a little bit of a panic last week, admittedly. The options that I had in the other accounts. It's a little bit of a sort of hard space at the moment. Now, just sorry, I'm just going to take that off. Sorry, I'm just getting used to this. Okay. This chart's not working particularly well, but had sort of this BGU sort of type action sold off pretty aggressively. Everyone thinks it's the end of the world. Price to sales ratio massive. Shorter term moving average is rolling over, but it has tagged the 50-day, and it has sort of kept that breakout level sort of okay. So the position I've got, I'm going to just keep for the time being. Potentially even rebuy it if it sort of holds this sort of 50-day moving average pretty well. That might take a week or two to play out, but for the time being, I'm going to hold that. I've got Tesla. And I've managed to stuff up Tesla pretty much every single one. BGU sort of type action, shake out down to that, tagging the 50-day. I think it's actually looking all right, but I do want to convert to options at some point. That's 5% of my portfolios, so it's not a huge amount. Given it's such a leader, I'm just going to try and give that one plenty of wiggle room. And yeah, sort of treat that a little bit sort of a different bucket than the other stocks I've got. Okay, so next one I've got is XPeng, XPEV. I managed to stuff this trade up, or I managed to lose money a few times now. Chinese EV maker, lots of fear of it. Chinese stocks probably warranted, to tell you the truth. But EVs in a very sort of hot sector. The chart had a sort of an IPO that has just this monster run here. It's sort of been basing ever since. And I think, well, up until this sort of shakeout down here, sort of in this sort of stage one action, then started to move out of that. It was all looking really good, like plenty of great volume there, and then I just got totally slammed the last week. I've got a tiny position in that in my portfolio, so I'm just going to just hold that, even though the chart doesn't look that good. I've got some long-term options there, well less than 1% of the portfolio. I'm just going to just keep those and see how they go. Sales are growing rapidly. The valuation is much cheaper than things like Lucid and Rivian from what I can see. So if the market ever gets comfortable with Chinese stocks, then this could be one that could really go. A bit of a random one I've got is Hayward Pools. Hayward Holdings, sorry, which I think is a pool company. This charting software is not updating properly some of the time, but had this sort of big sort of breakout here, based, came out with great numbers and sort of BGU'd again, Bible gap up, bought it here, then of course it flopped, but I'm happy just to hold it again, just a very small position for me. Apple's been a really nice surprise. Good thing about Apple options is that the volatility is pretty cheap. I bought the options back here, so I had to sort of go through a bit of pain. Really should have bought it when it sort of set up again here. And another trade that I like is I call it the 50-day shakeout. So that could have been buying sort of around here when we had that sort of the big sell-off, not that big, that pullback in September, October, market bottom. I could have had another go there. And those options are up 140, 50% for me. It's just had a crack of a run. The question is it extended? Like on the daily, it does look a bit extended. Not so much on the weekly. It's sort of coming out with this VCP sort of action here, a bit cup with handle and just moving away. I do expect it to pull back a bit. But yeah, geez, it's been strong, good volume. I think going to take some profits if it gets up to push up to 185, 190, because especially in this market, when things turn, it just turns so quickly, and you wake up in the morning and your profits are evaporated. So that's when I will take profits if it powers up a whole lot more than what it is, or at least take some profits or roll the options up to a higher strike price. Google, Alphabet. Sorry, it's not even there. I actually think this one's a bit more concerning. As much as I love the story and a big YouTuber and all that, but a lot of RSI divergence here on the daily, here on the weekly. And as I sort of found out with C, I did get out sort of just before that really started to turn over. Stocks that are sort of just meandering along, I just find them frustrating because I don't end up making that much money out of them. And I'm trying to make a lot of money out of this exercise. And I've just got the stocks. Owning the stock here is just a sort of floater. I can't see it's going to make me a lot of money, fairly quickly. So I'm actually going to sell that to make way to just buy more options that I'll go through in a tick. Now, this could be just rebasing before it sort of basically starts stage 1 again and goes off to a stage 2. Of course, I don't know. Has had a pretty big run. Lots of bases here, all the same. Not a sort of disaster or anything, but just looks like the steam's sort of just running out of that one for me. AMD's just been fantastic. This charting stock is shit at the moment. Semis are on fire. Taking up most of my profits. I think it was around here. When I say taking up profits, I sold the options that I had, took out the profits, and with the original cash amount that I put down, I bought further out of the money calls. So still kept me in the trade, but also just allowed me to lock in profits as well. Yeah, not looking so good now. Sort of getting tagged down from those shorter term moving averages, and it keeps rolling over. So I'm going to need it to settle at that sort of 50-day moving average. Otherwise, I might have settled to sell the rest out. Well, the other possibility is it's had a big run and deserves a break. Maybe it sort of just floats around that 50-day moving average for a period of time before getting on with it again. If that looks like it's happening, I'll actually buy the options, buy more options again, and have another go if this is just proving to be a pullback. Simo, sort of in the semi space. Actually totally stuffed this up. I actually sold at most accounts because I was getting bored of it. It just wasn't doing anything, and then bang, I even forgot about it. Just held it in one of the accounts, and then the options have gone up 3x or something like that in a fairly short order. It's not specifically semis, but sort of in that space, and that area is just on fire. I might even buy options in the other accounts. This thing probably just needs to sort of just settle down a bit. What this stock has done historically is sort of it will move up and then just faff around for a long period of time. So I'm not in a huge rush to buy it because it doesn't have that sort of super leader type quality where it just breaks away, maybe pauses, and then just goes. Okay, sorry, I should have gone through the portfolio. Ambarella. This has been just a total screamer for me. We've got the original BGU. In fact, the original one was back here. Held it. I can't remember where, but I actually held stock, sold the stock, sold some options, bought further out of the money. I got $300 calls, and it came out with just what must have been sort of great earnings numbers, and been holding up extremely well in a very otherwise sort of crappy market for growth stocks. I'm kind of thinking if this sort of just gives me like a stage 2A continuation buy, so maybe more of a pullback, I might even actually just buy more again. Let's see. F45 is a stupid trade. I'm actually fairly. I own some F45s, and I thought they were going to come out with. I bought it here, options here. I thought they were going to come out with good numbers as a reopening play, and just didn't at all. Put a small amount in, pretty much dusted that. Break my own trading system there. It's in an IPO base, hasn't traded very well on that IPO base. I shouldn't say that. It's still in an IPO base, hasn't proven that it's going to come out of that. Anyway, that's what happened. I bought that, yeah, because I made good money on the other stocks coming out of the October low, and then decided to try and get a bit reckless. Anyway, Shopify, I've got that. I've got the stock. I bought it here. I'm going to sell that because the stop loss has been hit. Again, sort of tag the 200 there as it does, and then it moves away. But it's like Google, sort of just drifting around. RSI divergence is there, different time frames. Just can't see how I'm going to make just mega money out of that. Yeah, so I'll be selling that. And this was a really stupid trade. Never mind. I actually bought some options here when I thought the market was just getting ready to go again last week. I was wrong. It's sort of just been sold straight back under the 50. It's not looking very good at all, is it? I could see more downside there, or maybe it does a bit of a fake out and then goes here, but it didn't follow my trading process 100%, so I should have just waited for things to firm up a little bit there. So I'll have to own that one myself. And again, I was probably just getting a bit reckless. One big sort of shortfall of mine, I got reckless after I've made really good money and start taking trades that aren't really sort of just top quality. So when the market sort of gets in the green, double green, yeah, go for it. But when it gets to the amber stage, yeah, I was selling off. I went selling positions like I went through, like Datadog, AMD, Ambarella, good trades, and then yeah, just get a bit loose with some others, and then yeah, start getting some of it back. Okay, now I've got the other stocks that are on my hit list is, where's my highlight list? So I went through, I'm focusing on FANG, nice and safe, low volatility, so you get cheap options. So I'm going to buy Facebook call options. Facebook's a stock that everyone loves to hate. Meta platforms, whatever it is. I kind of think though it's looking all right. So big base here to a decent base. Nice little, albeit slightly scrappy rally out of there. Stage 2 pullback, but so far it's held the previous resistance and actually tagged off there pretty well. Again on the weekly, previous resistance there. Chopped on the 200 a few times now. I'm not sure there's any rush to go and buy options on it, but I'm thinking that one looks okay. Like I said, it's a stock that the market or people just like to hate, and probably for good reason. It is looking a bit loose here, admittedly, so I might just let that sort of settle down for a day or two. But also some positive divergence on the RSI here, so I wouldn't be surprised to see this one just surprise the market and just go on and do sort of greater things over the next sort of 12 months or so. Okay, and then underneath that, the main ones on my list are mostly semiconductors. So AMAT is looking really good. Options aren't too expensive. See, it had a nice long base here. Pushed out of that. Not technically BG because it didn't do much, but if you look previously, it had these sort of, I'm not sure which of those are earnings, but we have good earnings and a big sort of huge volume days without moving much that particular day. Just seems to be the character of it. So I'm not just thinking that's not necessarily negative. Push out, pull back to the previous resistance, and then it sort of tagged off of there, and I should have been buying it here, but I'm going to try and grab myself some options there. Bounced off the 200-day just nicely. Now, maybe it's going to be a sort of stage 3. Maybe this is actually stage 3 here, but it doesn't look sort of so loose. Has had a big move, of course, but I think with the options here, I'm treating my options as a stop loss. So if I'm wrong and this is just stage 3 after all, it flops over, then fine. But I think there's every chance. This is a new stage. It's been reset. So stage 1 going into stage 2. And I couple that with how well the semis are looking. Happy to take this trade. Other ones, Navitas, smaller one. Get this showing stuff is not looking good, but a BGU here, sort of been pulling back in a sort of bit of a triangle type fashion. Down here, oh, sorry. So I'm looking to buy options. The problem is the volatility is very expensive, but it's only a $2 billion market cap. So it's one of those newer issues. That's one of those ones that could move a lot as well. Qualcomm. Really should have been buying on the BGE. See, it's pulled out of a huge base here. Should have been buying it there. Didn't, like an idiot. I'd like it just to maybe just settle down just a little bit here before going again. Although it does look sort of pretty good here though, doesn't it? So I'll probably end up buying that. Lab research. Sorry. Sorry. Let's see. Why isn't that coming up? Again, nice base there, shake out, pushed out of there. Slightly awkward spot. And so it had a BGU there. I think that one's looking all right as well. So many of these semis are looking really good. What's another one? Broadcom. Again, another long base, pushed out, pull back to there. Probably again should have been buying there. Big move out of here. Sort of a little bit extended from the 200-day moving average. Yes, it's a BG, but not mega volume. So I'm thinking I'll just try and let that pull back a little bit before jumping on there. It does go to show how good these semis are looking. Yeah, Nvidia is an interesting one. I should have, I just missed the trade on it back here. This is obviously the king, the super leader. Gave me another opportunity here. I squandered that one as well. Is this sort of a high tight flag happening through here? Maybe. Kind of thinking though, some of these others, like AMAT, for example, I know they're not kind of the same super leader, but the volatility is a bit cheaper and they're sort of just coming out of the base now. So I'm thinking that might be the safer one. So yeah, so in summary, a bit of fear in the market. Some of the old leaders have been sold off, probably quite rightly, sort of coming out as the world sort of normalizing, coming out of the pandemic. However, the market seems to be thinking the whole thing's going to roll over. It doesn't appear to be the case. So my trade is to buy the options on the FANG type stocks, options on the semis, and not too much else underneath that. What I really need to do to get sort of loaded up is I need a proper sort of sell-off like we had in October to see the number of stocks trading above the 50-day moving average to really sort of drop away. So I'm going to play a fairly conservative hand. I'm actually overall reducing my dollar exposure by selling Shopify and Google and replacing that with options on things like Facebook. But what I'm spending on the options won't be anywhere near what I own in terms of stock. So if the market does tank, my dollar exposure isn't too bad. But yeah, I've got a foot in the door at the same time. I should also say we should be having some good seasonality now for the next month or so. That's obviously been a little bit choppy. So I don't want to be out of the market completely and sort of miss out on good seasonality if that happens. So yeah, thanks very much.